So, Anandji, now before we conclude, last question from my side. So, 2023 people are expecting the next year. We are in December now. Recession is going to come, hit Indian economy as well. This decoupling is talked about more frequently. Everybody is very bullish on India. Any fund manager that I meet, everybody is. What is your view particularly for 2023, and what is your view of the long term, these two things?
Indeed. I think first and foremost, there are known risks and there are unknown risks. And to be very honest, the known risks don't have the lasting impact on markets. The known risks can have a lasting impact on economy, but today हम जब आप US recession की बात कर रहे हैं
जी,
एक साल से बात कर रहे हैं, so you have US central banks, US government, you have Indian central bank, Indian government, you have Indian corporate honchos, you, me, investors, everybody is de-risking away from the US recession. कि अगर US recession हुआ तो how should I save myself?
True.
So when there is so much of de-risking that happens, the impact of US recession on the equity market will not be that high.
Market would discount.
Generally, yeah, exactly. The market suffers the most from the unknown risks, the way we saw global financial crisis or
Brexit happening or COVID recent, yeah.
Something recent. So that is one fundamental point I wanted to make. Coming back to Indian economy and being bullish, I think there is caution. There is no doubt in my mind that India is a net importer of energy, and this situation which is around Russia and Ukraine and the high energy prices, high coal prices, high crude prices are not healthy for India. India has lost out a little bit this year in terms of growth because we had to pay for the subsidy. I think 2023 we already seen some correction in energy prices. If the things were to get resolved and energy price were to come down, it's a positive. US recession, can we gain market share from others? Can we benefit from China plus one? Can negate some of those impact. Also, high energy prices in Europe would have a lasting impact in terms of some of the manufacturing from Europe can shift to India. The third term which we have been using more often or hearing about it more often nowadays is friendshoring. That are we going to get more pie of the cake of the US and the Europe imports?
Right.
So to that extent, I think there are mitigating factors to the global slowdown. More importantly, I think India growth is also very, very robust so far.
Sure.
I think we have, as an economy, have taken a lot of pains in last few years, be it Demon, be it GST, be it NBFC crisis, RERA implementation, slowdown in the real estate. I think we have done many a short-term pain for long-term gains. We have invested in infra heavily, which doesn't create GDP immediately, but it creates GDP with a lag. The dedicated freight corridor is coming up. So to me, I think all the investments that governments have done, all the reforms we have done, taking toilets, getting Ayushman Bharat, I think we have improved the quality of life at the bottom of the pyramid. All that will have a lasting impact in terms of India growth story. So we don't know next year. I would not thump the table and saying next year I'm very bullish. But am I constructive on India? The bottom of this very, very beautiful story shaping up. So is there a set of 25, 30, 50, 100 odd companies which can do well despite of global challenges? Yes, that's possible. That's why 2023 will be the year for stock picking rather than really discussing macro.
Sure. No, what I'm trying to read from your mind is, what is the correlation between India and China? If US gets into recession, what kind of impact we can have as an economy? So while you talked about the other opportunities and...
I think, first and foremost, China is a very, very large manufacturer. And any market share it cedes is a big market share gain for the other economies, be it in Southeast Asia and in India. But I think more importantly, you have to appreciate that as China becomes richer, it will be consumer and not manufacturer. Over time, you will see China should ideally, theoretically, should turn a net importer of goods rather than a net exporter.
Oh yes, they're a rich country now.
Yeah, exactly. So they will be consuming more, and obviously it will be manufactured in the rest of the world, where the per capita income is low, the labor cost is low, because they will also invest in decarbonization. They will want to reduce pollution in their country. They would more want blue skies in Beijing and Shanghai.
Right.
So all those things makes me believe, again, very difficult to predict next 3 to 6 months.
Sure.
But when I see structurally, I think there's an opportunity for India.
Sure.
It's not given that we will win, but there's an opportunity for India to be a decent, not a significant, but to be a decent manufacturer for the rest of the world. And that is how the journey, any country becomes rich by manufacturing and selling goods and services to the developed world. And I think India has that opportunity today. So far, we've been doing all the right things. But again, as I said, it needs to get executed. That's why the bottom-up research, analyzing companies on a regular basis are required. So while theoretically these companies have potential to do well, but we have to continuously monitor them, continuously evaluate them. That is the job value add that we bring to the table.
Right. So Anandji, since you're heading the entire PAIF and PMS vertical at ICICI Mutual Fund, one of the largest mutual fund in India, what is your reading about Gandhinagar? What's happening there? A lot of new AIFs are getting registered there. There is a separate stock exchange which is getting built up. So any study that you've done particularly in Gandhinagar?
So let me give you a little bit of a broad perspective of the GIFT City. I think that's what you're talking about. And globally, India is a very large market for many commodities. But India is not a big hub for commodity trading, and a lot of hubs are getting created, maybe it in Dubai and London and others, and the vision is to make India a global hub. And the GIFT City is an opportunity where it's like a yo-yo. It's a foreign land within the land, something like that.
So there the Indian authorities are not allowed to in the sense investigate or
no,
intervene.
Not only about that, the capital controls and the other stuff which is stopping from global investors to trade in India, I think those are being eliminated. So I think that's a journey. That's what happens in if you see the entire China growth, what bases the SEZs, No, so I was just saying that it is like what China succeeded in terms of SEZs, and that is what we also tried, where it's like a deemed foreign land where a lot of domestic regulations or a lot of domestic constraints don't stop the growth.
Right.
I think that is what the whole
enabler to
support the growth and allowing the global investors to participate in the India growth story through that.
Right. So do you have any plan to get registered out there or come?
I think it's a continuous evaluation. Sure. We have not decided any on that, but we continuously evaluate.
Yeah, why am I asking is because there are a lot of NRIs. They don't want their dollar to be converted into Indian rupee, but they still want to participate in Indian equity markets. And through their AIF getting registered there, they have an opportunity to participate in Indian capital markets. So I see a lot of large asset management outfits like yours getting out there, trying to understand and registering themselves.